Silicon Valley Bank, which specialized in lending to technology companies, was shut down by U.S. regulators who seized its assets on March 10, 2023. It was the biggest failure of a U.S. bank since the financial crisis in 2008. To understand what happened at Silicon Valley Bank, it's important to understand how banks work. Banks accept deposits and use them to extend loans to other customers and invest the rest of the money elsewhere. The bank assumes that all depositors will not withdraw their deposits simultaneously. Like other banks, Silicon Valley Bank invested the money into safe instruments like bonds. After the 2008 recession, low interest rates in the U.S. led to cheaper loans and increased venture capital investment in startups. This benefited banks like Silicon Valley Bank because startups trusted them with their deposits. However, last year the U.S. Federal Reserve began raising interest rates, resulting in a slowdown in startup funding and a reduction in deposits at Silicon Valley Bank. On March 8, 2023, the bank announced it had sold $21 billion of securities at a loss of $1.8 billion to ensure liquidity and was planning to sell $2.2 billion worth of shares. Moody's downgraded the bank's credit rating, and Founders Fund and other venture capitalists asked their portfolio companies to withdraw their money from Silicon Valley Bank. This led to a high demand for withdrawals that the bank was unable to meet. Moody's Investors Service, often referred to as Moody's, is the bond credit rating business of Moody's Corporation. It is a leading global provider of credit ratings, research, and risk analysis. Founders Fund, co-founded by Peter Thiel, who is also a former CEO and co-founder of PayPal, is a San Francisco-based venture capital firm investing in companies building revolutionary technologies. On March 9, 2023, customers tried to withdraw $42 billion from the bank, which is equivalent to a quarter of the bank's total deposit. On March 10, 2023, the bank's stock trading was halted, and regulators shut it down. Will customers get their money back from Silicon Valley Bank? The Federal Deposit Insurance Corporation, or FDIC, created a new bank, the Deposit Insurance National Bank of Santa Clara, for all insured deposits of Silicon Valley Bank. Reports suggest that 93% of the bank's deposits were uninsured with the FDIC. The FDIC insures deposits up to $250,000, so customers who deposited less than $250,000 will get their money back, but others may only receive partial payment. President Biden reassured Americans that their deposits would be there when they needed them, and customers and businesses who were previously unable to withdraw their money could now access it as normal. President Biden also stated that the leadership of any bank taken over by the FDIC would be fired, making it clear that those responsible would be held accountable. Thank you for watching. If you liked the video, please give it a thumbs up and subscribe to the channel.